All right, the captain of the ship, the SMH, the captain is yelling at the sailors, Bill, Bill, get that water out of this leaky boat. And those sailors are the MAG7 coming to life here. Is it a pre-earnings run? Or is that rotation something going to stick? Or is the MAG7 going to crack too? And this market's going to crack and the IWM's going to crack. Well, that never happens because we'll just find something else to buy. Double guest today, Cow Guy 805. We love his opinions on the market. Nick Chahine to talk about the next 5% move in the market and how he's making use of AI. We're all fired up on this Thursday. Pre-market prep starts.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, we are taking a look at the charts brought to you by TradeStation, Board to Trade, Channel Analyze, Customize, all-in-one platform. Trade smarter, move faster, and stay in control with the platform built for serious AI traders. Folks, here we are. We're down 16 and a quarter hands. We're just bumping up. I tried to call a triple top, quad top yesterday, and they punched through, but really couldn't. We had a pretty good close, but man, we'll see if that level is this going to be major resistance or is just another consolidation to move to all-time highs. The buck broke down yesterday. 2 bad days in a row trying to recover, up a dime, 10038. TLT, I mean, this thing just cannot get away from 84 bucks, down 37 cents, 83.87. USO, well, there's news over there, but crude's not reacting. USO down 78 cents at 120.50. GLD and SLV. SLV, the big loser, 51.29. That's down almost a buck. 1.74%. GLD down 0.5%. That's a buck 97. 370.38. And Bitcoin, I think the thing's just stuck at 64,000, 65,000. So down 825 at 64,260. We're going to bring in Triple D here. And Dennis, the chips are selling off. The hardware is selling off, but we're just holding in there.
S&P will not go down for any reason at all because we have never had rotation like this in my 27-year history. We've never had rotation that simply fears cash, and it does. So what do they do today? When you've got the chipwreck, they go to where is it safest, at least they think in tech, and they stay within tech too, and they're going into the MAG7. MAG7 now leaking a little bit. About an hour ago is more pronounced. They're starting to leak there a little bit, but this is the market. You know, it's like software versus hardware. We see a little bit of that this morning. IGB is slightly up here, but really yesterday we saw, and last night we were seeing, you know, as some of the chips were selling off ahead of Taiwan Semiconductor, we were seeing money going into the MAG7. I mean, MAG7 had its best day in a very long time. Apple was up substantially. Microsoft bouncing back. Obviously, you know, you got Meta that's been a little bit hot since, you know, announcing that app or AI, their AI app. Google blasting off, maybe Warren Buffett helping it, you know, talking that he made the pick and not Greg Abel. Amazon blasting off as well, and up here again this morning. This is the market that refuses to go down. The S&Ps will not go down for any reason whatsoever. And if you're not going to go down, you've got to rotate. When you have leadership like Micron and SanDisk getting rocked, and we'll go into that this morning, especially when the cow guy comes on in here a few minutes, you've got to go into something else, keep the indices elevated. And they're going into the big mega caps because that's where, you know, it's the biggest market cap value. That's easily done. You start going into Apples and Amazons and, you know, Metas and Microsofts, and this stock market's not going to go down. So it's incredible. The rotation is absolutely incredible.
All right. Do we want to talk about the culprit today in the market?
We do. Bring Brentster in here.
Hey, good morning. How's it going,
everyone? The culprit today, and again, this is a day that, it was very much going to be dependent on Taiwan Semiconductor no matter what. But we set this up last night in the think tank. We're like, the bar is high here. Even though the stock was down from the highs, we just see the chips, SanDisk, what's happened, and Micron's happened. I'm like, even if Taiwan's, this is what I said in the think tank last night, even if Taiwan Semiconductor beats, I'm not sure it's going to hold any gain. Like, I'm not sure it's going to hold the rallies here. So it was one of those kind of clean setups to the downside, down 20 points here this morning. So that definitely worked out. But the earnings were good here, Brentster. Give us the details.
Yeah, the earnings were pretty great. They reported 431. Analysts were under 380, so they beat by a good 50 cents there. Sales 40.2 billion. Analysts were under 40 billion. They also said that they're going to invest another $100 billion in the US. Expected move here was around 4%. That's like 16 and a half bucks or so.
It's a big move. It's a good move, but give a perspective here because, Taiwan Semiconductor, was $150 a year and a half ago. So this is another one that's like tripled. And we just got it. This is where we are. Stocks, the leaders of like this year have just simply gone up too much. It's not that these companies are struggling. It's not that we're seeing fundamental deterioration at all. It's simply that they've just been overbought. I mean, you can't have stocks just doubling and tripling without checkbacks here. And that's what we're in. We're in a serious checkback period here now. I mean, Micron has done nothing wrong, but they continue to fall here. And you know what? I said, I think 1200 is going to be the top for the year. And you know what? Michael Burry is going to be right on this one here too. Now we're 855. We're breaking down. Move away from Taiwan Semiconductor for a second. Just look at this Micron chart. Just simplistic look at it. I'm not a big chartist, but on the right is about the most cleanest head and shoulder.
Oh, yeah.
Use the next. So, I mean, if you're a technical analyst, if you're a momentum trader, you got to be getting out of this stuff at this point in time. So, fundamentals, traders are completely different. If you're a fundamental guy, and you see, the earnings are growing, maybe you're buying the dip on this thing. But, I'm sitting this one out here because they've just gone too far too fast. I mean, Micron, give it perspective. A year and a half goes $81. I know that because I bought it at $81. Went up and I saw it way too soon. But I mean, this is where this market is. They've just gone so much. Stocks don't go up 1,000%, 2,000%. And again, we can say, oh yeah, but the earnings were great. But again, these are cyclical businesses where the underlying commodity has risen so much that it is clouding. Think about oil. Think about oil for a second. The oil stocks, all oil stock traders have, been down this road before. They know the business is cyclical. So even when USO was exploding higher on the war, the XLE and the XOM and, a lot of these were not, just participating nearly as much. And people were like, why? Well, because they knew the price was going to be temporary. It wasn't going to stay up there. We don't know that with memory. Maybe the prices are going to stay up here, but we know when Micron goes from margins of 30% to 90%, it's probably unsustainable here. Cow Guy, I believe, is coming in the background. Maybe he's not. I heard him click. Oh, he left. Okay. We're trying to get Cow Guy, so he's going to be coming in a second. He was here. Now he's just fixing his camera. So I want to bring him into this conversation here too. But don't just get caught up on just fundamentals, looking at PEs. You got to look at the big picture. The margins aren't going to stay at 90% for Micron forever here, and the market is telling you that right now.
Also, is it getting too expensive? I mean, that's kind of what you've heard for some companies as well. But we can pick up this discussion with none other than the Cow Guy, Shellady.
He just left again. He wasn't happy.
He wasn't happy.
He wasn't happy with his camera. I could see him. He was like, I don't know. So
well, that's okay. He's going to come into the conversation. Yeah. We can continue it. Go to SanDisk. The same story here. The same chart. SanDisk looks the same. It's the same chart. It's the ugly head and shoulders with the neckline right here, right now. So if they're going to make a stand, if the bulls are going to say, that's it, enough selling, we're coming in, because SanDisk is in a bear market, folks. I know it's crazy to talk about that. 2347 to 1500. That's like a 30% pullback here. This is a serious pullback here now. But if the bulls are going to make a stand, it's going to be right here at the triple bottom. There is no such thing as triple bottom, but I don't like technicals that much anyways. But we are right here right now, Joel. You like technicals. This 1478 level on SanDisk, is critical support.
I don't even want to talk about SanDisk.
Below there, it gets ugly. So you got to hold this level here. Like this is like bigger than the SpaceX 135.
It's old.
This SanDisk 1480 is the level.
You think you're saying like the high for the year is in. I'm saying the all-time highs are these things are in.
That could be the case too.
Yeah.
I mean, these stocks, give it perspective. If you're still sitting around in SanDisk, like what do you want? Like what do you expect? SanDisk, this is the craziest thing ever. 1 year ago, SanDisk, you know where it was 1 year ago? It was $40 a share, 40. It went to 2,000.
Whoa.
2,000.
What do you want? Like, what are you expecting? Like, if you're sitting here on all these gains and think it's just going 5,000, 10,000, 50,000, you've got your whole lifetime of gains in SanDisk in 1 year. Your lifetime of gains. You win the stock market by owning SanDisk for 1 year. You have a lot of money in there from 40 to 2,000. It's all on margin expansion and the commodity going up on underlying. Yes, there's a fundamental story here. Absolutely, there's a fundamental story here. But stocks don't go up 2,000-3,000% in a year without having serious corrections. And now you're in a serious correction. And does the party just continue? The market is saying no. The market is saying actually the momentum traders are starting to lose the 50-day. I guess it's a 50-day there now. But I mean, you know, they won't call it official bear market to get a death cross when the thing's down 50%. Thanks a lot. You know, this death crosses are such a lagging indicator. That's why it's useless. But I mean, this is where we are. We've come so far. Stocks just can't keep going up forever. This is like you won. If you were in SanDisk in the last year, you're a winner. It's time sometimes to ring the register. Now again, if it holds 14 from a short-term trading perspective, support is support until it's broken. And it's holding there. So this is the critical level here.
Yeah, I mean it's painful. It's painful to watch this thing go down every day, and
it's not painful at all.
Yeah,
That's
it is.
Western
No,
Digital.
Dennis, because I'm going to be the normal investor, and I'm going to say, now I don't care what my cost basis is. I don't care. The way I look at it is that I lost. It's at 2266, 22. It's called 2250, and it's at 1500. I lost $700 on my position. That's the way I look at it. I could have sold up there. I lost
Never get the
$700.
You've been a shareholder this whole time, Joel? You've been a shareholder this whole time, so you've had this since birth, correct? You've had this since it like spun off from from Western Digital. You've had this since birth. And Joel doesn't sell. He's Warren Buffett.
I'm going to sell this.
You're a winner.
I'm going to sell it.
You are the winner, Joel.
I just
like
don't
you were
know
the ultimate winner.
I'm not going to sell the whole thing,
birth.
but I'd like to sell the whole thing. I will. I will let you guys know when I do.
What point? At what point? This is such a great conversation here. At what point do you just say, like, I won and I take, even though, like, at what point, like, because Warren Buffett's the best holder of all time, but even Warren Buffett takes winners at a certain point in time. Like, at what point do you just sit down and say, like, this is unbelievable move, and the gift horse in a mouth thing you always talk to me about, Joel, which I already get script that saying, but you're the horse guy. I mean, never look a gift horse in a mouth. Is that what it is?
This is a horse with like golden teeth, man.
Yeah.
Can I propose a suggestion? Maybe it's time to take a little profit when you don't even want to look at it on your morning show. You don't even want to look at the chart on your morning show.
Yeah, but also I wanted to sell. I mean, I will say I wanted to sell it at 1,000. I wanted to sell it at 1,100. I wanted to sell it at 1,200. I wanted to sell it at.
I know Lisa's the holder. We know.
Yeah, we were really close to pulling the trigger last week, and there was a little family emergency and a discussion before I could hit that sell button, but we'll pick it up again. But anyways, we got earnings to talk about, right? We're in earnings season, and we got some movers. How about we start with?
Well, why are we moving around from this conversation here? Because this conversation
because I'm
is
sick of looking at this SanDisk and
okay, well, let's move on to the winners.
Sick to my stomach.
So what they've done here, Joel, is what we are doing right now in this market at this moment in time is we are punishing the spendees for the first time in a year and a half. We are punishing the spendees, which is SanDisk and Micron, meaning those are the companies that have been receiving this excessive spend. We know this market is so short-term. This is the short-term market that wants immediate gratification. So show me where you're spending money. We hate your guts. You're receiving money. We love your guts. That's what it is. Well, Micron and SanDisk, NVIDIA, AMD, Dell have been receiving money. We can't give you enough money because we need your products. We want your products. But there's companies that are spending because they believe there's going to be reward for this spending at the end of the day. Oracle started the excessive spending, and it has been tossed to the wolves. They hate it. They think Larry Ellison has done it all wrong, and the company's going bankrupt. People talking about their balance sheet. I mean, that's where we are on Oracle here. But just in the last little bit, we're starting to see some of the spendies, a la Meta, spenders, start to move higher here. So we're starting to see the rotation from the spendees into the spenders. IGV software is its own story here because that's the one that's getting disrupted. And then obviously IBM poo-pooed that whole sector, the other day. But I mean, Meta, there it is. We have excessive spending. They don't like the stock. Stock's done in the same time period. The SanDisk, the spendee, has went up 2,000%. Meta in that same time period is down. We go back to July of last year. The stock was $700 a share. Oracle in that same time period is down. It was $240 a share last year. Google in that same time period is up. Google's had, Gemini, and it's been moving up, so it's been moving on the hardware, and it's been kind of both. Google's kind of a combination. They're spending, but they're receiving money here too. They've got, obviously a lot of, products they're working on and different things. Apple's another one that just sits back. They don't spend a lot, but they're sitting back. They're defensive here. But we're starting to move into a market that is rotating now back into the leaders of yesteryear, the MAG7. So yesterday, best day for Apple in a very long time. Your fundamental traders will always find a headline to say this is the reason. But the reason for these stocks going up yesterday is because this money is allergic to cash and it's only going to go into other stocks. The best stocks for them to go into, the Apples and the Microsofts and the Metas, when that's where they go to find safety. Is Apple safe at 30 times earnings? I don't think so, but you can't argue with this market. It might even be 35 times earnings.
Shout out to Money Mitch last night in the STN Think Tank, dropping us a little framing of what we're talking about here. And why I'm pointing it out here is Mitch used, I think, a smart phrasing here. He called the MAG7 names the mega cap platform names, the mega cap platform winners. And I think that's a good way to describe it. He said the rotation in one frame is the AI trade is bifurcating. Mega cap platforms are the winners. Infrastructure hardware suppliers are down on overcapacity fear. Pretty good way to describe, I think, what we're saying here.
So where do we go from here? This is the question. Do we just sell all, the SanDisk and Microns and the big leaders and move into the MAG7? Well, that's selling the dip and buying the rips. So, we're not advocating that you're selling the whole and figuring it out, but you always have lifts. You always have, think about it even in SanDisk. Since, we've called, we did on Micron, I said 1,200. I've said on the show like a dozen times. I think it's going to be the high. Think about how many times we come back. I thought it was wrong because I called the first day and the stock had the earnings and then made a new high. So I was wrong. I called 1,200. I said that 1,213 high. It's like I figured that's going to be the high for the year after we had the washout day the next couple of days. But then earnings came around and we went to 1,255. Still the whole 1,200 area though. But now, we failed off the awesome earnings. We've been leaking, and now people are scared. The thing again, I know we came back to this full circle here, but we're just trying to tell you about rotation is you're going to have opportunities here. Like, stocks just don't go straight to zero. There'll be bounces. There's been lots of bounces. I mean, talk about SKHY. There's another one too. You want to talk about a choppy stock. Here's the 4 days of SKHY trading. So we start, obviously the IPO down at 148 or 149 or whatever it was. We just go to 177, because that's what we do. Then we go all the way back down the next day, test the 149, 151. Then the next day, we rally like 25% because they can't own IBM, so they better own hardware. So they buy it all the way up to 194. Well, now we come all the way back down to 163. So, I mean, in 4.5 days of trading, this thing moves 20% every day in opposite directions. Big up, big down, big up, big down. We're down big. Do we turn around and go up today? Probably not with Taiwan Semiconductor, but who knows? This one's been the choppiest stock I've ever seen.
I mean, it is bid all over the place, and the total disconnect between that and how it's trading on the South Korean exchange. I mean, if you could find a way to do some arbitrage there, Dennis, it might be worth staying up, for these markets. But trying to get more information. But before we move on from this, Mitch was making some comments in the STN room last night regarding the MAG7. And Brentster, you just wanted to add those real quickly?
That was the thing he was saying about calling it the mega cap platform winners. Just wanted to highlight that phrasing that he used, mega cap platform winners. I think it's good.
This movement is so fast. We just dropped 6 points in 6 milliseconds there on the S&Ps. Like, obviously we haven't even gotten to it. There's, problems in the whole world again, the straight. We're not even worried about the straight now. They're closing more straights. What was this news? And I'm assuming something just happened here again. If you just dropped really quickly there.
The headline from about 30 minutes ago was that Iran was telling the Yemen's Houthis to close the Bab al-Mandeb gateway to the Red Sea if the U.S. hits their power network. The Red Sea has been the thing. The Red Sea is the thing between the Sinai Peninsula and Egypt, and it's been the back door into this lane, into the shipping lane, while the Hormuz Strait has been under control.
So they're going to close more straits, basically. So they're going to close everything down around everything. So done with just closing Hormuz, we're going to close everything down. They're trying to get everything else closed down. I mean, try to do as much damage to the world economy as you possibly can. If that's the card that they're left playing, it makes sense. So what we can say is the macro picture and the fundamental picture here is very cloudy right now. What we can also say is SPs don't give a crap because money managers don't get rewarded for being in cash. They get rewarded for being in stocks. Just food for thought. If we continue to rotate like this, obviously the S&Ps are never going to go down. What if we get some real fear out there one day, though, Joel? What if we actually get some real fear? Like that, man, maybe it's different this time. Like, what is it going to take? This is just a hypothetical question to the 1,000 people who are watching on PMP right now, to you, Brent, to you, Joel. What is it going to actually take for the market to start, the S&Ps to go down? How is it going to go down? Because, obviously, we have a memory collapse now. We have all our leadership from last month collapsing. We have stocks, which we haven't even talked about. The space trade, the momentum trade. You want to talk about stocks that are down? You've seen Lunar, LUNR, 45 to 14 in 6 weeks.
Quietly.
ASTS, which everybody was long. And now they all sold on Twitter at the top because they're all geniuses, has went from $133 to $58 here this morning with an offering. Rocket Labs, Space Trade, it's just imploded, completely imploded here. Obviously, SpaceX, we know, has not been good either. I mean, there's a lot of stocks that have just been getting absolutely hammered under the surface. But the S&Ps say, what? So what? That's what the S&Ps say. What is it going to take for the S&Ps to actually say, oh my gosh, it's different this time? What is it going to take for money managers to go to cash? What is it going to take? I don't know.
Here is a few thoughts from the audience, if we care. TBD says, goes down if war starts raising rates like crazy. Seems unlikely.
Very unlikely. Not even
population decline and negative GDP. AI data center speculation.
I don't know if I have the answer to this question.
Yeah, and I think that's fine if we don't have the answer. I mean, Dennis, the thing that you were saying last night is kind of like, it seems like there's like a program out there in this market that is not allowing stocks to go down. They just rotate into a different space. That's been the theme of the show. That's been the theme of the shows the last week or so. Trying to respond to your question, I feel I felt what you suggested, and now that you said it, I'm kind of feeling it a little more. I feel like whatever that thing is out there that's happening in the background, it seems like maybe it needs a break somehow.
And what that thing is, it's institutional algorithms that don't make money by going to cash. You have new ETFs being launched all the time. You have double long ETFs, 2 times. We see those implode. Triple long stocks. This is the market that wants to take excessive risk. This is the market that actually, I've said there's no comparison to 1999 because valuations, just aren't there. And it's not 1999. People were saying 1999. They were saying it's like that again to me yesterday. And I'm like, well, they said, we obviously didn't trade in 2000 because we saw this. No, we didn't. You know what happened in 2000? We saw the S&Ps actually going down. We saw people actually, when the market started imploding, even before that, Joel, we traded heavily in 1999, 2000. You obviously were trading back in the mid-90s. The S&P had lots of big down days in there.
Yeah.
Like we would go down altogether, up altogether, down altogether. That is not the case now. This is rotation where the S&Ps refuse to go down for any reason whatsoever. This is a new animal. We've never seen a market that absolutely refuses to go down. Is there a scenario here where everybody is just so cash allergic that they all run for the exits at the same time? We actually could set up a crash. Is that scenario out there? I don't know. I'm asking. I'm not saying Dennis is going to say, Dennis, Dick predicted a crash. Not saying that. I'm saying, is it even possible anymore? Because all these bloody algos that just will not go to cash. They will not sell. They're going to go to other stocks at all costs. When we have massive selling and fear in Micron and the memory names, we automatically buy the MAG7. They used to just sell stocks. They used to just sell the S&P, and they don't do it now.
There's a couple different things. Higher bond yields, right? So where there's actually a reason to sell your stocks, right? And you can
We've
get
had
yields.
that though. So full stop on that. Let's just put that to bed because we've had higher bond yields for a long time. The bond market has been in a bear market for 3 years. The TLT is sitting down here near 10-year lows. I mean, we were $170, in 2020, and we went to $84. Yields have gone up. They were saying when yields start going up, they were saying this in 21, 22. When yields start going up, the stock market's going to crash and burn. It kind of did in 2022, but it came back. So, 5, 6, 7% is not good enough for this market anymore. That's the issue, is that this market demands 20, 50, 2,000% in a year. That's what the market demands. So people will not go to bonds for 5 or 6 or 7. You go to cash. Forget about bonds. You can get 5% in cash right now.
How about weaker AI-driven earnings? How about that? How about
maybe
we're seeing good earnings. We're seeing anticipation that these earnings aren't going to be good. So I think we're already seeing this. We're not seeing the weaker earnings, the AI-driven earnings, but we are seeing a horrible reaction to the earnings as if they cannot get any better in this. And then the other thing too, Dennis, I know that this has alerted you in 2008, to the impending meltdown in the market. But what? Tightening credit markets, and you're already starting to see that. You're already seeing some of these big funds, limiting withdrawals and stuff. So the credit, right now the money's flowing, but you start to get real tightening credit markets, and then that is another catalyst. And then the final thing, and the biggest thing to me is the geopolitical escalation. I mean, and we're seeing that in the market.
We've seen it for the last 3 months, but stocks don't go down. Here's my point. But people think the market is panicking. Like Jay Rice is saying the S&Ps are 1% off and panic everywhere. No, we're not saying that at all. The exact opposite, Jay. The exact opposite. There's panic nowhere. There's panic nowhere. The S&Ps are showing no panic whatsoever.
Zero.
That's why I'm concerned. It's not that I'm seeing panic everywhere. There's panic nowhere. Nowhere. Nobody's talking about going to cash that it's over. 0 people are talking about this. I'm bringing it up basically for the first time here today. Joel's talking about it. Joel's worried about it. But there's no panic. That's the difference. You've got leaderships. You have stocks like Sandisk, your leaders, going down 30% in 4 weeks. And S&Ps are at all-time highs. There is absolutely no panic there. So what does that mean? I mean, I've never seen a market that is so complacent, an S&P that is so complacent here in the face of losing major leadership and then buying up stocks like Apple that are already 35 times earnings. So there is absolutely no panic here. I'm ranting should there be panic? That is what I'm asking, Jay. Should we be more cautious in this market? I'm asking you. I'm scared to go to cash too. I'm like loaded
I'm
up
not.
stocks. I'm scared because it keeps going up without me. I have FOMO. I'm asking. You know, people say, oh, Dennis, you yell too much. This is how we bring passion. This is how we bring excitement. This is how we bring energy to the show. I could sit here like this and say, oh, look at the technicals, and look at the head and shoulders,
Well-
and look at the, and you guys wouldn't listen to me. We come for energy. It's my job to bring energy to the show. It doesn't mean that I'm like in panic mode here. This is me. I talk like this every day. Jay, you've listened to me for 13 years. So I talk like this all the time. I'm passionate. This is called passion. It's not panic. I'm not panicking. I haven't sold anything. I'm asking, should I? Because right now we can sell the top on stocks. The S&Ps are at the top.
I agree.
You can sell the top right now.
Well, here's
if you think that it's all going to implode. I don't know that. I'm starting to get scared by the complacency of this market.
Well, here's the thing. In when I really break it down, I don't know if like we're having a major correction or we're having a major crash or whatever. There's going to be a geopolitical event that everyone's out of control, or the grid's going to lock up one day, and all the spies and everything, they're finally going to bring down like our water system or hit out the grid. All those things are unpredictable. But the way I look at the market right now and over my investing term, I do not see the reward that I've seen over 5, 10, 15, 20 years. And I've said that before. But now at my old age, do I think with the S&P sitting here at 7,600 going to 8,000? Yeah, fine. I would be totally fine with that if I slightly even went more cash than I am, and that S&P went to 8,000. I could care less. But you know what? I think the probability of it going to 7,000 or lower is much higher. And I would not be happy at 7,000 or 6,500 or 6,000 or 5,000. So I think it all has to be where you're at in your investing horizon, what your expectations are. And my expectations for this market have been exceeded, were exceeded, and continually to be exceeded. So I feel like I'm way, way, way overstaying my welcome in this market.
I think we are. I think that's what it is here. I think Micron and SanDisk investors just found out the hard way that they way overstayed their welcome. And I think that's where we kind of are heading here too. That we have all overstayed our welcome a little bit here. And with the S&Ps refusing to go down, what happens when everybody is just so complacent here that all exit at the same time? So it is setting up where everybody is on the same side of the trade, and that's short cash. That's what it is. Bring Nick Chahine in this conversation. I got to bring my buddy Nick in here because he's obviously watching the options. He trades in such a unique way where he limits his risk. Come on, let's bring Nick in.
Nick Chahine, simplestocks.com, a major contributor to the Stock Network. Nick, for some reason, I don't think you're going to talk us off this cliff with the next 5% move in the market.
No, I'm not. Actually, all the points you're making are the same points I'm trying to convey to my people. And I think if you want to pinpoint it this week, it's the topic you're talking about, these chip stocks that have gotten us here at a speed that was neck breaking. So we are rolling out of them. They have all triggered bearish charts with a lot more downside, Micron being the chief. But they all look the same. Huge head and shoulders, which implies huge downside in a series of lower lows and lower highs. If you want to pull up the SOXL, you'll see that we've been selling rallies since June, like 20th or something. So the question is, do we have enough money to rotate into? Like if they're rotating out of the SOXL, is there enough Apple, NVIDIA, actually NVIDIA is one of them, Microsoft, and all the software as a service that have been beaten down for a while, that had been beaten down for a while. So is there enough rotation? If there isn't, then we should drift lower. So I said we won't be here to my people. I said the big picture is I would not invest here. I would be trading. And if somebody hands me over $1 million, say, what do you want to do? I'll say, let me get my 5%, my 4.5% Buffett style for now until the market figures out what it's doing. Because there's this one story that keeps going around, which is emblematic of the whole thing. Some guy out there has a bet on Micron. He borrowed money to get into Micron at the right time. He was up $8 million or something like that. And his goal, his take profit goal, is $2,500 per share on Micron. And that story broke out when Micron was at its highs. And so that's a lot of conviction based on what? That's the problem. So the next 5%, we are ping-ponging on the S&P inside of a very narrow range. You can call it the CPI range. This day we had the CPI a couple of days ago. So if we snap out of it, we have 2 to 4% of upside or downside, whichever side we snap out of. So I see this morning we're struggling a little bit on the NASDAQ, just like yesterday. It was a miracle pop yesterday late in the day. We kind of saw it coming in the options, like you said, Dennis. So the options are not lying. The only mystery for me is what the hell's going on with the VIX? It should be showing a little bit more concern.
No concern.
Yeah, so
that's one thing I want to ask you too, is insurance on the overall market is cheap, like not insurance on Micron or SanDisk. But if you want to take puts on the SPY, like where you're just thinking, this market could just turn over and roll over, it's fairly cheap right now, is it not?
It is a heck of cheap. So if it was me, I would take calls in the VIX at the money for like September, not any shorter. And believe it or not, those hold their premium well. Even if you have a green day in the market, they'll fall a little bit.
If you go out far enough.
Yeah, it's like almost free insurance. There's no free insurance, but you're renting insurance and you can give it back whenever you want for a slight green or red. I've been doing this for years. So the trade would be for me, since you cannot buy cheap insurance on Micron, for example, you would finance calls in the VIX. And if you hold a portfolio of stocks, especially tech stocks, you would short the NASDAQ itself by selling calls against your asset. So if I'm long a bunch of tech stocks, I can comfortably sell a call in the QQQ. Or if I don't want the open-ended risk, I would sell a call spread. Selling a call is a big responsibility. You're unlimited losses to the upside, but you're participating to the upside with stocks. It's like selling a covered call on a stock. So credit call spreads, bear call spreads, that's the same term. Look into it. Don't do it blindly. You need to know what you're doing. Look into it. That would help you finance some of the VIX calls. So this way you would be, quote, shorting the market, but without really shorting the market. To buy puts and hope for the dip, yeah, if you catch one, you're going to be rich pretty quickly. But if you don't, you're going to lose your money pretty quickly. So not very practical. Buying VIX calls holds value pretty well. And financing it by selling credit call spreads would give you another layer, but it's not necessary if you don't know how to do it. But it's fun to learn. Also, trading the futures would be a way. I'll give you an example. I had 2 futures classes in the past 6 months. On the first one, I said, I'm shorting in the middle of the class. I'm selling 1 futures contract. That made thousands of dollars because I had timed it well based on the charts. On the second class, I did that, and I'm still short. So I was up as much as $900 per contract, or $9,000, depends on which contract you sold. And right now I'm flattish red. So I'm leaving it open, stress-free, to show people how stress-free trading the futures can be, but don't jump into it when dabbling. You need to learn it. And so I have a class going on in August.
That's right. Yeah, tell us about that class, and then you're doing one more this weekend. But tell us about that class in August.
That one is fun one. So my people are interested in what I'm doing in AI. I've been knee deep in AI. The futures class is at the end of August. On the website, we have links to it. I believe I sent Josh a link late. So go to simplestocks.com. Somewhere you'll find your way to signing up for that class. It's going to be 2 days, small group, maybe 20 people, maybe, and 2 instructors. It'll be amazing. Sunday, Monday. This way you'll catch a quiet day, and then the evening open in California, it's 3 p.m. And then the next day, full day trading on the fly. This weekend, it's a lot of fun. It's an AI class. So I've been knee deep in AI. And not just for trading, but for my life. So now I have a dashboard. I log into it, pushing buttons of everything I want to do, workouts. Everything is in the cloud, and applications. Built a whole bunch of web apps for myself. And I think I can teach some people that don't know anything about AI. So anybody that wants to know what the hell is AI, how can I use it other than a fancy Google, which by the way is very dangerous. Use regular Google. Don't use AI for that because it can take you down the wrong path. And up to building a full-fledged app to do whatever you want it to do. So I am not an expert in AI, but I can get you from zero to building an app from start to finish in multiple different ways to do anything you want. I am qualified to do that because I did it for myself on multiple platforms. That is happening this weekend, Saturday, Sunday, 10 a.m. Eastern, both days. I will record it, but it's going to be fun. I said it's 2 hours. I bet you anything it'll be longer than that because I can't shut up.
That's my problem too. We both have that same problem here, Nick.
Yeah.
Bring it back to the markets because, you were talking about, options, and I like the idea of getting on the VIX and going out far enough. I think where a lot of people get flawed is they're trying to time it perfectly. They're like, I'll buy the weekly calls, because I think it's going to go down. And then they expire worthless. And then they buy the weekly calls again. And I mean, these weekly options here, or even like now, obviously, 0DTE, which you're trading here, this is like more money. People are making these or selling these options and not buying them, correct?
The 0DTE, if you don't know what you're doing, you will have great days, but you will have more terrible days. And I don't think you can survive. The 0DTE is a high skill game. We do it very well because we have a bunch of systems working for us. If you're going in there and going on a hunch and, oh, this has worked, I use my moving average, you may have better success than somebody that doesn't use moving averages, but it's not about that. I'll give you a perfect example yesterday. So in the morning, we opened with a little bit of enthusiasm. Of course, I sold the open and I said, okay, whoever thinks we're going to go to high heaven, I don't think so. Here's your ticket. We sold call spreads, as bear call spreads. And then I was like, okay, let's sell one credit put spread on the S&P. And wouldn't you know it, the S&P gets pressed. Half the room's like, I'm ready to bail out. I'm going to close for a loss. And I look at the data. I look at the options. Nope, don't book it. We're going to close closer to 75, 60. And sure enough, we had that little bounce and we got up there. So the 0DTE trade, please don't do it alone. You're going to have a hard time being successful consistently. I got lucky with a couple of AI tricks that now I can compile my information like this, and it's visual. So now I have a lot more confidence in saying there is a put wall, there is a call wall. Don't bail, don't buy this call, don't hold puts, don't hold calls. You need to know what you're doing in the 0DTEs. The options field has changed completely because of that 0DTE. The calls on the VIX, I'm very confident when I say they hold well if you buy them out in time. If you buy the weeklies on the VIX calls, you're not going to accomplish the same thing. We can't time a black swan, but we can sure rent some insurance to see if we can catch one. I've caught all of them. Every major spike in the VIX, I'm holding calls. And I haven't lost on many of the other ones. Like right now, I am down on some of my VIX calls, but very little. And I've gone through multiple all-time high clicks. Imagine holding puts for that. They'd be worthless. So on the S&P, for example. The 0DTE, don't do it alone. Get yourself a bunch of friends. Our room is open 10 hours a day. I'm talking 10 hours a day. Like they're in there right now watching nothing except my screen.
Nick, what do you think the catalyst is going to be? I mean, Dennis and I were discussing, is it, we're coming into earnings season so far. I mean, these companies, is it a warning from Microsoft? Is it a warning from Amazon? We saw what happened to IBM. Are you looking at the credit markets? Are you more concerned about geopolitical concerns? Or is it just something out there that we don't know about?
I'm concerned. I'm concerned about the world revolving around one guy who's trying to change 1,000 things at the same time. What are the odds of all the chips falling into place? And I'm concerned about the expectations and the dumbassery of this market. We have become the Borg. We all have the same opinions at the same time from tweets, even when we know the tweets are fake. Like there's no way this is true. Like yesterday, some guy tweets from Iran that, oh, we should be nice to each other. The market bounces. We're too reactive. There's too much in play, and there's too much facts that is not necessarily facts. I mean, you and I have been trading a long time. The flash crash, nobody saw it coming, right? So we have the odds of a flash crash scenario that not to say that the same type of crash, but it seems like people that are in charge now don't have enough experience to know that, SHIT happens and it comes out of nowhere. Instead of being all in, like I cannot believe that these grown-ups on Wall Street are not saying, hey, maybe you should ease off of Micron at $1,500 a share.
No, they're coming out and telling you it's going to 4,000.
Right.
Yeah.
Right.
That's
my point.
Who was that guy from Evercore?
On SanDisk, like last week, they top ticked it. They said Evercore.
SanDisk
4,100 price target, Nick.
SanDisk was $20. So here's the question: the person that borrowed to buy SanDisk, at what point does he or she get pressed to bring in more cash? And if they are, what will they sell in order to cover their margins? So that's the question. I mean, it could be something not related to some stocks that fall because they get sold to cover margins because they can't sell their beloved, chip stocks. The valuations are pretty high, but I think the expectations is the insane part. There's so much irrational exuberance to borrow from somebody who just recently died that is blowing my mind. I cannot believe this. So luckily, I can make money off of it by taking the other side of that bet. I did lose on one of them, but I like WDC. There's no change in the P&L currently. It's just riding the wave of Micron, which has completely transformed its P&L. And I'm telling you that I've run businesses before, like unrelated to the market. I've had multiple companies under my pocket before. And if I can raise the price on my client 4 and 10x, and my client says, please give me more, there's a crisis in that business. It's not normal. That's my whole point. If it's not normal, when does it go to normal? And what happens to expectations? How will the margins recompress? I'll give you an example. I wanted to buy a PC. I may have said that last time I was here. And the PC was $2,000. And the AMD 395 Max I, whatever it's called. 128 gigs of RAM, soldered in, shared RAMs, blah, blah, blah. That's what everybody wanted. It was $2,000. Now it's like 3,500. The same one. And they offered on sale for 26 with half the memory. All because the memory in it. So at what point the retail investor says, I don't want that. So the seller of the PC says to Micron, I don't want that at that price anymore. Yeah. I have way too much inventory. I overpaid. I'm stuck. So that's the risk, the catastrophe risk in the chip sector. But I think it's bigger than this. The people are believing whatever BS story is coming their way. And that's the opportunity to trade that until we have a significant drawdown in some stocks, and then you build a portfolio one at a time. Like IBM, 25% one day, 24% one day. It's ridiculous. They missed by what, like 8 cents or something?
Yeah, Nick, I got to ask you before you go, the exchange stocks and perpetual futures, you see what they've done to the CME and the SIBO and the perpetual futures coming out. You think that just want to know what you think of the exchange stocks and also perpetual futures.
Okay, I don't know much about the competition, but what I saw is the devastation in the CME stock, for example. I was like, okay, time to sell some puts or put spreads to get long the stock and catch the falling knife and leave room for error. And those trades are working out. So I personally, I value my downtime. So I don't want to be trading 24/7, that's for sure. But I don't know enough about that subject to give you anything that's meaningful. If you give me a chart, I can get you going.
Yeah, I mean, that could be another thing. They get those perpetual futures going and you get some rookies in there. They don't ask for margin, man. They flush you out, man. And that can create.
So the futures, I do well with the futures because humbly, I say my skills of charting have gone to another level because I have 150 eyeballs watching me all day. I can't mess up many times. They will leave. So I had to level up my game in the charts.
Okay.
If you don't know charts and you're doing futures, you're gonna lose.
Okay, Nick Chahine, Simpler Stocks, a major contributor to the Stock Trader Network. Nick, it's always fun to get your take on things, and even when you disagree with us, we love having you on. So
thanks for the invite, guys. It's always fun to come here, and I'm hosting on the network chat room. That was fun yesterday. It always goes by so quickly. It's like whoop, gone.
Yeah,
Yep.
Nick's been coming in here weekly in the SCN think tank, giving us some options ideas here too. So we appreciate all your help and all your work, Nick. Keep it going, buddy.
All right. I'll see you next time.
Thanks, Nick. We've leaked a little bit here farther. I mean, there is multiple things happening here today. Like, let's just paint out the whole day. You know, what's happened? Obviously, Taiwan Semiconductor, even though the earnings were really good, the reaction is disappointed. And it's caused more of a chip sell-off. Call it a chip wreck if you want to do it. The SMH is down 3% here this morning. But, you know, the other thing that's happening here is we have more escalation on the war front. So you have, you know, USO not going up much. It's kind of come up already here, but you can see, you know, the S&Ps are jittery here. We've had a couple of headlines breaking this morning. You know, if we start getting other straits being closed or trying to close up other stuff to try to because that's really what Iran's got. They know they can't compete with the US, you know, from a war perspective here. But where they can compete is trying to do damage to the world economy here. And they know Trump cares very much about that. So hit them where it hurts. Hit them where it hurts is in the economy. So if they can, obviously, the straight closure was the first thing, but they start trying to figure out other ways to hurt the world economy here, maybe the stock market starts paying attention to that too. So that's a risk factor as well. So the risk factor is that this, you know, obviously bubble in the SMH is coming off very quickly here in the last few weeks. And, you know, this geopolitical risk is escalating here. So does that mean we sell everything and move on? I don't know if that's the case. Like, that's what I'm asking. People think Dennis is all full of panic here and, you know, Katie barred the door, it's over. I'm just saying there's no panic here.
Yeah,
so, you know, this is, you know, Nick kind of said the same thing. If you, what tells you there's no panic is that he's telling you VIX calls are cheap, S&P puts are cheap. So, you know, you could go and hedge yourself here. He says, go out to September, you won't lose that much, which is great advice because people say, oh, you know, we think it's going to be a crash today or tomorrow or the next day. I'm going to go buy the weekly puts. And, you know, those just expire worthless. Like, well, it's going to happen next week. I'll buy the puts again. It expires worthless. Get out far enough where it's not really hurting you and you can get some exposure. It's probably the better way to do it. Or the VIX calls. I like that idea too, but don't go next week.
So do we want to go and finish up our earnings? Do we want to hit some ratings here? We got about 8 minutes or so until the 9 a.m. news dump.
Well, the earnings, obviously, there's a couple of big ones. I think we should focus our attention there because we only have a few minutes here. And I mean, obviously, last night, Taiwan Semiconductor, everybody talking about, but we had General Electric report and UNH, so a couple of big ones. So let's go to UNH first.
Sure. UNH here, I'll pull up the chart, Jules' lovely TradeStation chart. UNH reporting earnings 638. Analysts were down under $5. Sales coming in at 112 billion. They say they are looking for fiscal 26 adjusted earnings $19.50 to $20. Analysts are around $18.50 or so. Report looks good. Guidance looks good. Shares trading up here about 7% this morning.
So you could have had UNH earnings probably in line and the stock was going to go higher. Perfect day for them to report. What are you talking about, Dennis? UNH, this isn't a perfect day for a report. Why, Joel? Why is it the perfect day for UNH to report? Because this is nothing to do with chips. It is all about rotation. Now, again, UNH blew it away. They were going to go up on this report no matter what. But what I'm arguing is that even if they didn't blow it away, it was probably going to go up on this report here because of the reaction to Taiwan Semiconductor. As soon as, if you're up at 1 a.m., as soon as you see TSM going down as hard as it is, should have been buying UNH ahead of the report. I'm not up at 1 a.m. I have a life. You know, I'm 50 years old now. I want to live a little bit longer. But that would have been the trade because that's the first thing I thought when I woke up this morning. I get out of bed and I'm checking my quotes. And like, first I'm checking Taiwan Semiconductor. Oh, it's a chip wreck. I'm like, and then I went to UNH next. I'm like, I said to myself, I wonder how much UNH is up. And then I look up 40 points or whatever it was, you know, it's 35 points. I didn't even need to see the earnings. You knew it was going to be higher because of rotation. Rotation runs it all. And then it's like, okay, well, fundies have a place. You know, obviously the report was really good. So, you know, I mean, if UNH would have came out and lowered guidance, you know, that would be another thing. They go down no matter what when you lower guidance. But as long as they, you know, were fine, it was going to go higher because of the rotation.
As long as the expected move was $25, it's trading up $28.50. As long as it stays, it holds the top of that expected range, then I don't know how high this is going. It's not even close to a near all-time high. You had a bunch of happy sellers between 432 and 435. I don't know where they're at right now, and they pulled those orders. They're waiting to see what happens on the open. But they just may say, yeah, I wanted my average price to be 432.50, and you're giving me 447 and 448, 449, 450. So that's the way I'm looking at it. Selling in the strength, which was my plan in SanDisk and Western Digital. Now I'm going to have to be selling into some weakness. Opportunity to sell into strength. If you think this move's just going to continue, then, just make sure it holds atop the expected move. And on this one, I mean, man, didn't Humana come out with some bad news? No, who came out? And it was
HCA.
HCA. Okay.
The guidance cut, you're saying, right?
Yeah.
ELV too. ELV was
good call,
day
Triple D.
on it too.
Yeah. So there you go. There's a look at UNH. Too bad Warren sold out of that, or the new guy sold out of it. Man, they had a hell of a trade going. Remember that?
That's funny,
Yeah.
Joel.
Oh, he bought the bottom. I mean, there's a day trader. Greg Abel's a day trader, it looks like. General Electric. Give us the earnings for this one. This is one that's like not obvious rotation in either direction, so it's not like expensive or anything. So you can't. Some stocks you got to just say like, this is like, because it's obviously got a little bit of like momentum style, because G has been really good. So it's a trickier one to call off rotation. Some stocks you just can't call off rotation.
Yeah, good call. And just a reminder that this is GE Aerospace. It's kind of, I'm just in the habit of like GE, General Electric. GE Aerospace reporting Q2 earnings 202. Analysts were around 185. Sales coming in around 13.3 billion. Analysts were down under 12 billion. They did raise their guidance kind of substantially. They raised it by about 50 cents or so. They are now looking for 2026 earnings 765 to 785. Analysts are down under 760. GE shares here this morning, despite a good quarter and some good guidance. Shares are down about 3% or so this morning.
You had a bunch of support here at 352. Now you're only $2 above that. So if they could scoop this up, get it back above 352, fill the gap at 53.35, but I don't know about that. I think you get a pop to that area. That looks at resistance. Looking at the downside here, folks, you find something between 330 and 50, couple daily lows here. Looks like a lot of air underneath here. Maybe longer term, a gap fill here at 336.86 is something that you can look at. But you see the setup, selling in the earnings, a little consolidation. And now break lower, consolidation, General Electric. The greatest breakup in the history.
In history. The financial engineering was a marvel to behold on that. Like, it was a stock that everyone hated it when it was down at like $18, and they split them all off and everybody got rich. Just genius. I mean, Honeywell's trying to do the same thing, but they kind of went about it the wrong way because half the people didn't even get the stocks they spun off. I hate that. So... okay, quick ratings here. If you want to run in the intro really, really fast, or do it real quick. Of the day, I'm going to give to Truist, and it's Lululemon, and I'm not giving it for a great reason here. Truist downgrades Lululemon to sell. At this point in time, now they want you to sell it. Stock target price $94. This has been the worst S&P performer, I believe, in the last 2 years, down from $516 to $115 here now. Call this Johnny come lately, whatever you want, but Joseph Civello, who downgraded the stock, is really late to the party. He didn't have a buy on it, which is good. He had a hold, so we'll give him a break there. But you're downgrading so late to the party here. And we're in a laggard market here.
I know.
Like, this is a market where they're starting to perk up the laggards a little bit here. So we'll see. Like, retail's lagged, and Nike and Lululemon are the ultimate laggards that just never rally. There's a group of stocks that just are hated no matter what market you're in, and Nike and Lululemon are in there. I don't know what turns the story around here, but I'll tell you, above 122, it'd be interesting for a trade. It's moving down today, obviously, here on the downgrade. Let's see if they can shrug it off.
I don't like this rating.
It's so late to the party.
And if you got jammed, it went to 104, it went to 122, and you kept selling and saying, "Oh, I want to pull back to the 50% retracement." Well, you may just get that today. That comes in at the 113 area. There's also a triple bottom at 111 area. So, I mean, falling into support here. This would be one that if you're like, Truist is right, this is going to $80, then you want to see offers coming out on the open. You want to see it breach the pre-market low and just keep on going. So Truist, I'm taking the other side of this one on you.
Quickly looking at the 9 o'clock news dump, me and Brentster will quickly look through it here on
There
our news
was
feed.
a Micron press release. It doesn't appear to be anything. Micron announces completion of their strategic customer agreements with key tier 1 suppliers and ecosystem partners. No terms. Micron might have moved on that, but it might have been an algo reaction. That does not look like a material release
right now.
There's nothing crickets here.
DJT.
This
if you
was
want to
from
talk DJT, Trump
we can
and Technology Group launches Truth API, a new licensed data service for financial services partners that provide the fastest access to Truth Social's most influential accounts. So DJ talked a little bit on this.
This was reported by Axios about 15 minutes ago, so we are getting confirmation of that here by DJT with the press. That was the press release you were reading from Dennis, correct?
Yeah, I'm just going through. There was like 50 that dropped at 9 a.m., so we're still going through.
This
like
is
AMD,
what happens.
I've had a little something there. It's just like there's so many, so that's why we need 2-3 people just looking through all these things. The algos are looking too here for us too. So I mean, there's more than 50. Like I'm just keep scrolling. It might be 100. It might have actually had 100.
So I'm getting to the bottom of my list here.
I think there was 100.
Yeah. I think we hit the couple that we needed to, the DJT, the Micron, which was a bit of a nothing. We have I think that was about it. I think we're pretty clear here. News desk, do we have anything else? Michael Feehan is highlighting Voyager. Voyager announcing a strategic partnership with, let me get the company name. The stock is moving just a little higher here, VOYG. The company name for the strategic partnership with Voyager is Gessinger. Voyager and Gessinger are doing a partnership memorandum of understanding for the Voyager Institute for Space Technology and Advancement Partnership. I think we're clear on the 9 a.m. news here.
Awesome. Good job, Brentster. Good job, chat. Everyone's engaged here. Again, you know, the S&Ps are very resilient. They should be down a lot more today, but they don't because of rotation here. I'm not sure what changes that. Like I am questioning actually, you know, if the market can crash anymore. I'm not even sure it can. I mean, we have Band-Aids. So, you know, flash crashes are a thing of the past because, yeah, well, obviously circuit breakers that come in here. But it's incredible the resilience of this market. And insurance is cheap. So if you are worried that it's possible, I'm just trying to find out if it's possible anymore with the rotation that violent as it is. I mean, the only way is if actually people start getting real fear where they start like, you know, moving into cash. You start seeing that happen, then it gets ugly.
Okay, Tony Pollock, Real Life Trading, be joining us tomorrow. That's it for today, folks. Good luck out there, and thanks for being an important part of the Stock Trader Network pre-market prep community.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN Think Tank at StockTraderNetwork.com.